And joining us now to discuss is Betterment CEO Sarah Levy. Sarah, it's great to have you back on, and that's exactly where we're going to start. You got stocks at record high, albeit perhaps a small collection of names that have powered us to those levels. Is that translating? How is it translating in the survey results and how folks are investing across your platform?
So overwhelmingly, I would say the word is anxious. And, you know, when we surveyed really all four generations of investors, we were somewhat surprised to see that the election and anxiety around the election is actually overshadowing everything. And really the two themes within that were, I believe in, you could see the polarization, right? The political polarization. If the other guy wins, I'm going to pull money from the market. And that was true of both political parties, which we found kind of interesting. The other thing is, you know, focus on inflation, right? People are feeling it in their pocketbooks, and that is holding them back. And then interest rates. Everybody is following interest rates. 3/4 of those surveyed are focused on interest rates and chasing yield.
Interesting. And we talked about the $6 trillion in cash on the sidelines. Is that what you're seeing then, especially when you do have high-yielding assets and money market funds and cash investing instruments that can provide that yield?
That's exactly what we're seeing. And, you know, we would have thought that some of these records in the market would have spurred a little more consumer confidence. But I think the looming election is really, you know, the overwhelming factor here. And so people are sitting in cash. They like to see those yields. I think to some extent, there's not a full understanding with the retail investor of after-tax yields and how some of those big numbers translate, you know, after taxes. So I think that'll be sort of interesting for people to digest. But as the rates start to come down, I think our expectation is there'll be more movement into other, you know, tax equivalent yield products and other bond products to continue to chase yield while we wait for the election cycle to shake out.
Hey, Sarah, good to see you. Reflect with me for a moment on this. This is what jumped out at me from your survey, the generational impact of time in the market. If you're Gen X, a boomer, or older, and you had a decent amount of cash in the market, even pre-financial crisis, but certainly pre-COVID, then, boy, you're feeling pretty good, right, if you've been riding the S&P this whole time. But how much of that anxiety might be based on, okay, you're trying to buy a home for the first time, or you're trying to build up your retirement and your emergency fund, and things are already expensive, including stocks?
You're right. I mean, the generational, it's in some ways it's predictable, right? So first time homeowners or folks seeking homes for the first time are basically saying, I'm waiting longer. I'm sitting on the sidelines. I'm waiting for rates to come down. I can't buy that dream home that I want, you know, that I always thought I would buy at this time in life. So we're definitely seeing kind of a delay there. We're seeing, I think, less reaction out of the older generations who, as you point out, John, have had a nice run up and are saying, look, I understand compounding. I understand time in the market. I've benefited from that, and I'm going to stay the course. I think what you see with the younger investors is that they don't have the benefit of that history. And so there's a lot more FOMO. There's a lot more advice being sought from social media, which to me was actually one of the biggest findings in the study, was how social media is playing a role in people's investing decisions. And some of that's a little scary.
I wondered about that because all kinds of experts now are on social media. I mean, we've got a social media presence on CNBC as well. So how much of that is people who are purely social media, like a roaring kitty, influencing investors? How much of it is just social media has become a major channel now for people to get all kinds of information?
That's a really good question, and I think it's probably hard for us to completely dissect the results in that way. But I think the distinction across generations was so clear that it really led us to believe that it was a broader seeking of social media and not necessarily the experts. Now, interestingly, the number one source for advice across the generations was and is financial advisors. So that to us was a great sign that people are seeking out, you know, solid advice and the right brands. But we asked about brands like CNBC. We asked about TV. And again, the older generations were looking to these brands, and the younger generations are really like believing whoever is in their feed. And that to us is a little bit more concerning.
Would you, I guess, just looking back at previous years where you've done these surveys, Has anything been atypical or different than what you've expected to see, depending on where we are in a cycle, be it from an election standpoint or a rate standpoint? Or is this trending with right where you'd expect to be right now?
I think it's mostly trending. I would say the two things that stuck out as a change was a sharp increase in social media. And so I think that is notable, and we got to continue to watch that. And then I guess predictable, but also a big change year over year was emergency savings and how many of the retail consumers have actually pulled money out of emergency savings just to pay the bills in this last year. And so I think that's a little bit worrisome just about how savings rates, we talk about money on the sidelines, but that's for people who have the money on the sidelines.